All right, I want you to take off your gold hat for a second. I want you to put on your hat of a truth teller. I want you to be a serious person, and I want you to explain to me why gold has outperformed Bitcoin so far this year, up over 50%. Bitcoin's up about 35%. But over the last 5 years, gold's up somewhere in the ballpark of 100%. Bitcoin is up 1,000%. Why do you think that Bitcoin is not valuable? Or have you changed your mind? You now own Bitcoin and maybe think that gold and Bitcoin is the debasement trade that everyone should be allocated to.
Well, the reason that Bitcoin is up that much is because there was a big drop in Bitcoin, and then it had a huge rally, right? But if you look at the peak from Bitcoin, which was in 2021, when they had right after the ETFs came out and all that, or there was Bitcoin got up to 69,000 in November 2021, and at that time gold was around 1,900. Today Bitcoin's around 123,000, and gold is over 4,000. Bitcoin is about 15% lower today than it was at that peak priced in gold. And so to me, that was peak Bitcoin. Even though technically in August of this year, Bitcoin got a little bit higher than that in terms of gold, but not much, but has since collapsed. I mean, Bitcoin then declined by a full 20% priced in gold.
All right.
Maybe it's down about 18% right now from its peak from August. But
I want to make a bet with you. I want to make a bet. This is a gentleman's bet. Right now, gold is up over 50%. Bitcoin is up somewhere 35%. By the end of this year, I believe that Bitcoin's 2025 return will be higher than gold. If I am right, you have to tweet out and say, Anthony Pompliano was right. Bitcoin beat gold this year. But if I'm wrong and gold outperforms Bitcoin in 2025, I'll tweet out and say Peter Schiff was right. Gold outperformed Bitcoin this year. Deal?
Well, I guess we can make that bet. I mean, I have no problem collecting on that.
So you think that gold will continue to outperform Bitcoin, and by the end of December 31st of this year, you think that gold will have outperformed Bitcoin for 2025?
Yeah, I mean, I think there's a lot of downside risk in Bitcoin. I mean, I think Bitcoin is much more highly correlated with the NASDAQ. And tech stocks, the NASDAQ made a new record high yesterday as well. So risk assets have been in favor, and there's been a big appetite for risk. But we can easily have a correction or a bear market in risk assets, and that would include Bitcoin. And I think if investors get more risk adverse, they're more likely to want to buy more gold, not less. So if we have an overall decline in the stock market, the gold bull market can continue, but the Bitcoin rally can't, because Bitcoin is going to follow other risk assets, because at the end of the day, that's what it is. It's not a safe haven store of value the way gold would be. It is a highly speculative asset that people buy because they think other people will pay more for it. And that's, the same dynamic that drives a lot of momentum stocks. I mean, they get, devoid of the fundamentals. People aren't buying momentum stocks because they have a good dividend yield or because they have a low PE. They want to just jump on a moving train, and they're afraid to not be on it because everybody else is in on it, and they want to get these paper gains. And so that's the same thing that's happening with Bitcoin. But there's a big risk that dynamic can reverse. And I think the biggest risk for Bitcoin is all the money that has piled into Bitcoin ETFs that came out of gold ETFs, that came out of gold stocks. A lot of those investors may well try to switch back. They may try to say, you know what, I sold my gold stocks and I bought Bitcoin ETFs. I would have been better off if I just stayed in my gold stocks. Maybe I'll go back to them. I think I got rid of them too soon, and there could be a lot of selling. And then you have a lot of these, Bitcoin treasury companies that have also been the big buyers of Bitcoin. I think that whole trade is going to blow up. And a lot of these Bitcoin treasury companies are going to go out of business. And when they have a going out of business sale, what are they going to sell? Well, they only have one thing to sell. They're Bitcoin. So, there's going to be a lot of Bitcoin for sale. I don't think the U.S. government's going to step up and buy it. I think that's all a bunch of hype about the strategic Bitcoin reserve. So, there's a lot of downside risk in Bitcoin. I don't see a lot of downside risk in gold at all. I see a lot of upside potential, though.
Maybe you're right. Maybe you're not. Obviously, I disagree, but we'll find out on that front. You mentioned President Trump. He has put what many would consider very different economic policies in place compared to his predecessor. There are things like the tariffs. There is obviously the immigration kind of crackdown. You also see spending, which you mentioned. Talk through what is the grade that you would give the Trump administration on their economic policy so far in the first, 6 to 9 months of this administration?
Oh, I mean, I give Trump an F when it comes to economic policy. And the Trump economy, is not that much different than the Biden economy. I mean, the biggest thing is the massive government spending and the massive deficits. And so not only is that the same, but it's actually worse. Yes, we've added on tariffs, but I don't like tariffs. I mean, I'm a free trader. And tariffs are taxes. We need more taxes, unfortunately, because we have huge deficits. But the tariffs, the way they're being operated, are just going to make American industry even less competitive. And it's going to result in the manufacturing sector, what's left of it, shrinking even more. But what I particularly don't like about the tariffs, too, not only the unconstitutional way that they've been imposed, because they really need to be imposed by Congress and they need to originate in the House because they are taxes, and that's how taxes are supposed to be raised in the United States, not enacted by a president, but passed through Congress. But I don't like all the exemptions that are being thrown about and how Trump uses the tariffs as a weapon to try to get companies to give concessions or to do things that they might otherwise not do, but for the extortion of, well, if you do this, we'll exempt you from tariffs. And I also don't like the fact that, some companies can bribe their way out of the tariffs, larger companies, whereas smaller companies are stuck, paying the tariffs. So I don't like this kind of central government planning, this micromanagement of the economy. Trump was very critical of Kamala for the socialist policies that she advocated, yet he's pursuing a socialist economic agenda of his own. So I don't like anything that Trump is doing when it comes to the economy, right? There's some stuff that he's done that I can support, but it's not economic. The economic policy is horrible, and the precedent that it's setting is even worse, because Trump's not going to be president forever. And it's most likely that the president who's going to follow Trump is going to be the most left-wing, radical socialist Democrat that we've ever put into the White House. And the reason that I'm convinced that it's not going to be a Republican is going to be because the economy is going to be so much worse in 2028 than it was in 2024.
All right, let's have a serious conversation for a moment. Take off your crypto laser eye hat. Set aside the memes, the hashtags, and the number go up chance. Let's talk reality. The kind that doesn't care about hype, or tweets, or speculative fever. Because here's the truth. Gold has outperformed Bitcoin so far this year. And that's not a glitch, not a coincidence, and definitely not an accident. Gold is up over 50%. Bitcoin, somewhere in the 30 to 35% range, depending on the day you check. Now sure, if you stretch the chart back 5 years, Bitcoin looks like a rocket ship, up thousands of percent, at least for the people who didn't buy the top or lose their passwords. Gold, over that same period, has roughly doubled. Sounds boring, right? But in finance, boring is often the synonym for real. Let's take a step back. Bitcoin's so-called massive performance this year looks a lot less impressive when you remember where it came from. It crashed from nearly $70,000 in 2021 down to the mid-teens before climbing back. That's not strength. That's recovery. It's like someone bragging they're up 200% after falling down a flight of stairs and crawling halfway back up. Gold didn't crash. It didn't need a bailout. It didn't need a new ETF hype cycle or celebrity endorsements to stay relevant. It just did what it's always done. Held value while everything else gyrated around it. Now, if you actually price Bitcoin in gold, the story gets even more interesting. Back in November 2021, when Bitcoin peaked at $69,000, gold was around $1,900. Today, Bitcoin's roughly $123,000, and gold's over $4,000. That means Bitcoin is actually lower priced in gold, about 15% lower than its 2021 peak. So even though the nominal dollar price looks exciting, when you measure it in real money, gold, Bitcoin has underperformed. That's why I keep saying, Bitcoin peaked in 2021. Everything since then is just noise. Now I know the crypto community doesn't want to hear that. They'll tell you Bitcoin is digital gold, that it's a hedge against inflation, that it's uncorrelated with the system. Except none of that has proven true. Every time risk assets fall, Bitcoin falls harder. It's not behaving like gold. It's behaving like a leveraged tech stock. Look at the Nasdaq. It hit new record highs this week. Bitcoin followed. When the Nasdaq corrects, and it will, Bitcoin will follow again, just like it always does. Why? Because Bitcoin isn't a safe haven. It's a speculative vehicle, a momentum trade masquerading as a monetary revolution. Now, I'll give you this. Bitcoin's volatility makes people feel something. It's exciting. It's the financial equivalent of an energy drink. But that's not a store of value. That's adrenaline. People aren't buying Bitcoin because it's stable, or because they need to hedge inflation. They're buying it because they think someone else will pay more for it tomorrow. That's not investing. That's greater fool theory. You can dress it up in blockchain terminology, decentralized rhetoric, or libertarian philosophy. But at the end of the day, it's the same psychology that drove tulip bulbs, Beanie Babies, and .com, IPOS. Greed wrapped in the illusion of innovation. And here's the thing. I'm not against innovation. I'm against delusion. Now, before the Bitcoin crowd starts tweeting, Peter doesn't get it. Let me say this clearly. I do understand Bitcoin. I understand exactly what it is. A speculative digital asset that has value only because other people think it does. That's not an insult. That's literally what it is. Gold, on the other hand, doesn't need a marketing campaign or a tweet storm to prove its worth. It's had intrinsic value for 5,000 years. It's been money everywhere, for everyone, at every stage of civilization. You know what gold never needed? A white paper. Let me give you a sense of scale here. People like to say Bitcoin is the new gold. But the global gold market, above ground, is worth over $15 trillion. Bitcoin's total market cap, even at its best, hasn't crossed $3 trillion. That's not digital gold. That's digital junior mining stock. And here's where things get even more interesting. A lot of the recent rally in Bitcoin hasn't come from individual believers buying the dip. It's come from institutional speculation through ETFs. And those ETFs didn't create new demand, they recycled it. Money left gold, ETFs, and gold mining stocks and poured into Bitcoin, ETFs, because of FOMO, fear of missing out. But the same way that money can rotate into Bitcoin, it can rotate right back out. And when it does, Bitcoin's support will evaporate. Think about it. When the average investor who dumped their gold stocks for Bitcoin realizes they would have been better off sticking with the real metal, what do you think they'll do? They'll sell Bitcoin ETFs and buy back gold exposure. And that's not just a hunch. We're already seeing the early signs of that shift. Meanwhile, gold's fundamentals keep getting stronger. Central banks are buying gold at record levels, the highest in modern history. China, Russia, Turkey, and even countries in the West are quietly hoarding physical metal. They're not buying Bitcoin. They're not even pretending to. Why? Because when governments and institutions think about real reserves, they don't want something that can disappear if the power goes out. They want tangible value, something that doesn't depend on miners, nodes, or internet access to exist. Now, I know Bitcoin advocates love to say, gold can't be sent across the world in minutes. Sure, but gold can't be hacked, spoofed, or vanish in a flash crash either. And let's not forget something. Gold's role isn't to compete with technology. It's to outlast it. Bitcoin might have its moment in the sun, maybe even another run before this bubble ends. But when the dust settles, when the speculative fever fades, gold will still be standing. It always is. And that brings me to the little gentleman's bet I made with Anthony Pompliano, better known as Pomp. He believes Bitcoin will outperform gold by the end of this year. I took that bet because not only do I think gold will win, I think Bitcoin's in for a reality check. Now, it's nothing personal. I actually like Pomp. He's sharp, passionate, and he believes in what he's doing. But he's also wrong. And when this year wraps up, I'll be happy to tweet, "Pomp was wrong. Gold won again." Because Bitcoin might outperform on hype, but gold wins on history. And that brings us to the second part of this discussion, the political and economic context behind all this. Because let's be honest, markets don't move in a vacuum. They move in response to policy. And right now, policy in Washington is an economic circus. President Trump is back in the White House, and a lot of people, especially those in the financial media, keep calling his approach pro-growth or pro-America. Well, let me be clear. I give the Trump administration an F on economic policy.